to place as well. God,
Just
I've had a
been
terrible
playing the
run recently.
boss. Yeah.
What's that, mate?
I've just been playing the boss. I'm all revved up, ready to go.
Oh, you have? What's the
Yep.
boss? Is that a computer game?
No, I don't play computer games. Bruce Springsteen.
Of course. Um, okay,
Da, da,
so
da, da, da. Yeah.
welcome to everyone in the show. I'm just, oh gosh, you know what? It always confuses me when I haven't got my screen up. We have got a trade that I've put some orders in the market now. This is definitely a what can we call it? It's good morning, SF. We have got I don't know what to call it, mate. It's quite contrarian, I guess. It's a contrarian trade. It's the FTSE 100 certainly looks like it's going down, but I am going long here. I've set a couple of orders in here and here, which I will just make a bit bigger for you. And in actual fact, let me put this on the UK chart for you instead. I'm effectively coming down to retest a 15-minute bar. Where have we got? 15-minute bars down here. 15-minute trend down here. So my order is just above this area here. So order it's 58.27, and if that one's missed, then I've also got an order at the highs just in case it starts to take off. It may well not. Now, the reason this is a contrarian trade, that there's no doubt in my mind that the market is showing significant signs and signals for downside on the chart, on the longer term charts, and there's also no doubt that the numbers are absolutely atrocious. You know, with our ISM manufacturing yesterday, and that was a poor number. Disney, one of the big Goliaths in the US stock market, has come out, and it has said that it will. I can't remember the actual numbers, but their operating profit is absolutely atrocious. So.
Really?
Yeah, their streaming system made quite a lot of money, but they still had setup costs because it's only really just started,
Okay.
and
Yep.
and because of the film franchises that they own, basically unable to get back to work. You know, nobody's able to get into the studios and start filming, and also they have their theme parks that they've got to think about as well. So
Oh,
the
yeah.
Disney revenue was really dismal. Where is it? Let me just bring this one to you. Yeah, so the CEO, sorry, the Walt Disney Corporation said Tuesday it will see an impact of some $1.4 billion from the coronavirus in the current fiscal quarter as a result of massive hit to the theme parks and other operations. The media entertainment, so that's not the total revenues rose 21% to 18 billion for the company, with the media operations showing strong growth. And it said it will withstand. Revenues from its direct consumer operations would include the new streaming platform to rival Netflix, jumped more than 4 billion in the fiscal quarter, but the unit lost 8 point, eight point, is that? Eight, that can't be 812. Oh, 812 million due to the expenses from the rollout. Okay, so actually just a little bit, as they're setting up, they did turn in a little bit of a loss um, even on their digital platform as well. And I guess that they've got a few issues in some respects, because if they are selling the fact that they're going into this new platform, they've got this new platform that's out there rivaling Netflix, and that's one way that they're going to try and create revenue. That's all well and good. But the issue is they can't make any new shows because nobody can go
Yeah,
back to
can't
the
work.
studios and go back to work. But anyway, I'm long FTSE 100. I'm not being triggered yet. I'm long down here. 58.27 is one, and 58.67 is the other. So I've put an order in, a buy stop here, and a buy limit down here. So if it comes down here, then and bounces, then I can figure out what to do with this one here. But I want to get in, and the reason I want to get in is that I was just going to bring you why the market on the wider time frames looks really, really weak. And there's no doubt about it. It's, you know, it's incredibly dangerous here to get in some respects. But I'm not putting my house on it. And I'll tell you the reasons for getting in a moment. But you look at the pattern here, and this is the rising wedge that we've been watching for a number of days or weeks now, really. And the rising wedge has been broken now to the downside. So there is a suggestion here that this market just breaks down and goes. And if that happens, then I will put protection in place. The stop area, if you are taking the long on the buy limit, will be down just on the 15 minutes. So you can, in fact, let me put these numbers up. I know you probably want to get to the pound trade, actually, don't you, mate?
It's a pretty tight range today, so but there's no movement. So yeah.
Is that a good thing for you to get in or bad?
Well, yeah.
You need to get
Toss the coin, isn't it? It's Wednesday. Wednesday's
okay.
winning Wednesday it is.
Oh yeah, of course. Okay, so let me do this really quickly in the background then. So 58.27 is the entry, and what I'll do is I'll just do the entry and the stop loss, and then we'll talk about the targets in a minute. Stop loss is, let's call it 58.05. Now these might be in fact 58.02. These might be subject to change, but just so you have them. So entry is 58.27. Sorry, 58.27 with a stop loss at 58.02. And in actual fact, that stop loss is probably going to be 58.7 instead. 58.7, and I will get to reasons why I am looking at long FTSE. Now the other entry is at the high, so you guys can figure that one out. You know, as you go, that's 58.67. But let's try and get this bottom one first. We'll go to you, mate, and then we'll come back to the FTSE in a second.
Roger D, as I say, pretty tight range on pound US dollar this day. We have three pretty small candles, so I'll give you the entry and stop loss here for the OCO beta test trade, which is in negative at the moment after about 4 weeks of trialing by about 1.5%, something like that. I haven't actually done the exact figure. So we are selling, well, we're buying first because we're about middle, it doesn't matter. We're selling at 1.2412, which is 10 pips below the low of the range of the last 3 hourly candles. And today that is that bar there. So 10 pips below the low. And the stop loss is 15 pips above the high, which of the range of the 3 bars, which is this high here. And that is at 1.2455. The reverse of that, of course, is the buy order, which will enter or trigger at 1.2455. And the stop loss for that is 1.2412, exactly the reverse of the sell order. Yesterday was a partial loss. Again, not having a great week to date. Monday, Tuesday, both losers. Let's see if winning Wednesday can get us in the winner's circle. So back to you, mate, and we'll come back and do some analysis a little bit later.
All right, great stuff. So
hi Sync, hi LT. How are we all?
Yeah, hi guys. Right, we are looking. So I'm looking for a long in the FTSE 100. I am also pretty tempted, I have to say, to take off the gold trade for the downside. It looks all right. In actual fact, I've done that now. I'm taking the gold trade off. Now it's a hardly any loss on this one. And the reason that I've taken this one off is that I was trading this really off the back of the ISM number, and I was expecting a bit of a boost in the dollar, and it just hasn't happened. So I don't like this anymore. You know, it's just in some respects my interest has expired in the gold trade coming down. Now that doesn't mean that that it won't come down, but it means that the trigger is now invalidated, and with no trigger, it just kind of puts me off. So I'm no longer interested in gold. Let's go back to the FTSE. So the gold trade is cancelled effectively at very little loss. Now these are my entry points on the FTSE. So I'm looking to enter down here. Now, as I say, this is a pretty contrarian move in many respects because everything points to downside. So I would completely understand people not getting involved in this. And you can see that there are weak bars here. There is a rising wedge. There's a weak bar from yesterday, so a trigger bar that would suggest that we really should be looking for the shorts instead of the longs. But I'll tell you was just propping me up here, mate, making me wonder whether we might just grab back inside this area here. And that is the irrationality of the market movements. It has not broken down on, and it's the same thing with the what I was just saying about gold. That ISM number really should have pushed the market down and kept it there, but it hasn't. What we saw overnight was a move to the downside in the FTSE 100 from this particular point here. But then it's just bounced all the way back up again, and it's attempting to get back above this level. Now that's the reason that this entry is above the price point, because if it's going to go higher, then it's potentially going to get back inside this pattern and go. So I don't really want to miss the move if that's the case. But I'm just looking at the market, and it's so irrational that patterns just start to fade into the background. In some respects. Now that doesn't mean that if this does start to look, in fact, not look. If I don't get some clear indication of when it could sell off and it actually selling off. Let's go with the unemployment numbers later on, or the ECB meeting later on. If that was to happen, if we start getting a sell-off after that stuff, then yes, I will go short. But at this particular stage, what I'm looking at is a market that's either waiting for the news and data, so it's going to go nowhere, which means that I am much keener to continue looking for trades in the current direction, or it doesn't seem to care. It's kind of like going on the basis that the US market is pretty close to opening up again, and it's just going to continue to go higher. It's just I guess it's just it's a contrarian play because I don't understand the upside, and because I don't understand the upside, it just makes me think, well, the technicals aren't really in play in some respects. I wonder now if we think about the psychology of why people are buying, and this is something that confounds me, I think, a bit deeper. If I think about the psychology of why people are buying this market, my first thought is, are people buying the market because there's nowhere else to put their money? Are they can't really keep it in cash because it's not going to give them anything. They can't keep it in bonds now because the bond price has been so obliterated. So do they go to stocks? And then I think, well, why would you go to stocks? Because they're not offering any return either because the dividends have been slashed. So the only other thing I can think is that people are just positioning. That there might be some positioning going on, that people are quite keen on the market going higher.
I think it's all over, and they've got the best price they're going to get.
Yeah, exactly. So it is, as I say, it's completely against any. I mean, you look at the patterns here. This is the wider trend line there on the rising wedge. Then you look at this one as well. There's everything to suggest that this is the area to come down. So why I'm going long here has got nothing to do with the technical patterns, and for this reason, I can't really offer any genuine counsel that this is going to be the best trade you're going to make this year, because it probably isn't. But I just I can't see it going down. It's just it's so unbelievably resilient that that I think, well, what's going to drive it lower? And I guess it's one of those things that the things that seem to have put a bit of a firecracker under the market's seats over the last couple of years have been things like a trade war with China, which I will wait and hear on. And if that sort of all of a sudden appears, then fine, I'll change position, or tension at least between the US and China, and I'll change position.
But you would think that's certainly on the table now, because Trump keeps banging on about, well, it's no longer a conspiracy theory according to the rest of the world. The rest of the world is now on board that this virus has been created in a lab.
That's right. That's right. Yeah, exactly.
So, if that's not going to create tensions, I'm not sure what is.
Well, there are of course tensions between the two. I suppose the question is, what does that mean for the market at this stage? I mean, Trump said he was looking at ways to punish China, but he's kind of rode back on that a little bit. So I haven't really heard anything else from Trump since he did make that statement. So I don't have anything there. I don't have any reason for the market to come down as yet until we hear something. We seem to be, coming out of lockdown, which puts the US economy and other economies potentially, back to work and back producing again, and things firing back up again.
Greater risk.
That's all at greater risk. And this is the thing. I think when the news or data comes out that there's a repeat of lockdown, that's the time to go short. But and I guess this is what I'm looking at. I'm wondering whether at this stage the fundamentals, it sounds a bit weird, but the fundamentals might end up trumping the technicals. I know the fundamentals are 100% awful right now when it comes down to the numbers. But I mean the factors that are taken into account. People have known about ISM. We had the ISM number yesterday, and there was already predictions of a 36 print, was it, or something like that, and it came in at 42 or 43. So are we at the point where some of that negativity is effectively being priced in to the market, and it's waiting for something else that's significant, some unknown shock before it moves to the downside? So that's the thought process going on here, mate. It just makes it's a tricky one. It's confusing, yeah, it's confusing. But I have to say, when things are confusing, for some reason, people tend to buy stocks, and I don't really get it, and I don't know why, but that just seems to be the state of play. So I'm going over a kind of the historical average of the market movement, and the historical average is up. So that's why I'm looking at longs in the market. So I am long. I'm putting my areas to go in long, but my faith is quite low. So I'm going in very light. I'm going in on a couple of light longs here, and we'll see what happens.
Yeah, I think light's a good idea.
Yeah, it's one of those, isn't it? I mean, you go long very light and go short really heavy. It's one of those, really, because the market should be coming down. And maybe when it does flag some downside, then I will flip the position, but I'll flip it hard, and I might even going at an extra quarter to the downside. But right now, as I say, it's pretty resilient, mate, and it continues to hold up. So while the market is confusing, and we always say it can remain irrational longer than we can remain solvent. Well, I'm going with the irrationality. I'm going with the irrationality of trading against price patterns. I'm going with the irrationality of trading against some of those data points. But the rationality, the rationale behind it is, I don't think people know where to put their money, and those that have taken their money out in cash, how long will they hold cash for? That people are going to get twitchy. People don't want cash under their pillow. It's just especially investors and traders don't want cash under their pillow. They want to put their money to work because that's their job. So that's why I'm going long the FTSE here, and we'll see what gives, and see what happens. Now the other thing is, I looked across the board. Now gold, as I said, I've taken my trade off gold because the market didn't react in the way that I wanted it to react. It still looks kind of heavy to a certain degree, but I tell you what, when I started to look at this on wider patterns here, I was looking at gold and I was going, well, if the market is going up, then surely people are going to want to buy the protection of gold. That's the other thing. The market does continues to go higher. This is an hourly chart, so let's change this to a 4-hourly chart. When we change this to a 4-hourly chart, then I see this, and I'm thinking, okay, well, gold is putting in an inverted head and shoulders. So even though we may well be on a bit of a trend line going along and going down here, so that's one aspect of the trend line. There's another one here. Looks pretty good. Even though this is going on, there's a bit of a reversal. There's a bit of a hold here. Let's not call it a reversal pattern. There's a hold here, and I wonder what's going to drive gold down. And in some respects, if anything is to drive gold down, then it would probably be maybe the market going higher. So this is the other thing about it. But if the market is to go higher, people will probably try and protect themselves with some gold. So that's the reason that I lost interest in the gold trade, and plus the fact I was really trading the event of the ISM number, and that just didn't transpire. So I've got rid of that gold trade. Came out as very little loss on that one, and we'll see what happens. Going across the board to the barometers, S&P continues to edge higher. Another reason to be going along FTSE 100. Dow Jones continues to edge higher. The WTI continues to edge higher. Okay, it's holding in this particular area, and it's certainly a potential selling point up here. It's in a bit of a sell zone, but it's holding its area up there. The VIX is continuing to push lower, and what else? Oh, and copper. Copper continues to edge itself higher. So, there are cases to be made to say, well, the market doesn't look, if it is going down, it doesn't look ready. That I think that's maybe the case to be made, and maybe we get a false move back into the pattern on the FTSE. Maybe we get a false move back into the rising wedge, and then we start to fall. But I suppose my thinking is it just doesn't look like it's now. So if it's not going down, there's only one other direction it can go. You could argue. What's that mean?
That's the logic you have to use, isn't it? If it's not doing what you think it should be doing, then it's absolutely doing something else. So you've got to pay attention to that something else. Sadly,
yeah, exactly. And I may as well trade it. I may as well trade it until it shows me it is actually going lower. But at this stage, that isn't happening. So I've got a couple of longs in the FTSE, and they are going on. The other one, just finally, I wanted to check was the was the dollar yen, which is continuing to push to the downside very gently, actually. So
I'm not happy with that.
You're not happy with the dollar yen?
Well, I got out of it expecting it to go a little bit higher than it did, and I wanted to get back into it, and I've missed probably 1, 2, maybe 3 opportunities. But yeah, this didn't look nice. I'll go through them in a bit.
Okay, mate. Well, the euro didn't pick up yesterday either. We were talking about that one potentially picking up after the ISM
just
number.
Stayed there. Yep.
Just stayed where it was. We do have the euro meeting today, don't we? So there might be something going on with that as well. And to be fair, things aren't great for the euro. We had that problem between Germany and the EU, and that may well continue into the session. Sorry, I got distracted there. I just read just reading a headline that the pharmaceutical company AstraZeneca have had Farxiga has now been approved in the US to treat heart failure in adults. And the reason I'm bringing that up is that AstraZeneca have also signed a deal with, or they've got some sort of deal with the Oxford University to sell their COVID-19 vaccine product when that comes out in July. And it is just an absolute beast of a stock. It is just going and going and going, and seeing another headline where that is producing it. Look at this. I mean, this is AstraZeneca on a daily chart. We see it start to rise up here in April, but look at the chart since then. It has just gone and gone and gone and gone and gone. So it's just, and I was checking out some of these stocks yesterday. My God, there's some stocks that are up 400% from their lows. I mean, granted, they were small, kind of like penny stocks almost, but they almost exclusively are in the health and medical sectors. Yep. So some of the health and medical stocks, my God, if you'd been on top of this stuff and kind of knew the ins and outs, and I have to say, I looked at the stocks and a lot of them are quite obscure. But if you knew that industry, and anybody that focuses on the pharmaceutical sector could have made an absolute killing during this period. For want of a better word, because they are just on the right sector. And this is the fascinating thing with all this stuff, is that if you get on the right market, it's one thing. But if you get on the right sector within that market, then you are just, I mean, if we go back to let's go back to.
Not my thing, of course. As I said, it makes my head ache, but totally see what you're saying.
Yeah, I mean, it's just crazy. But this is the banking sector back in 2008. This is the financial crash in 2008. Now, obviously, everybody knew it was the finances that it was a financial crash. So what happens? Well, people sell banking stocks, and look at the move. It just kind of dropped up from here, from 11,000 right the way down to 3,000 within the space of what looks like 2 years. I mean, it's just understanding, I suppose, and being on top of what is the sector to trade per event. And if you can understand, and it's a shame really, because I feel like the move to the real opportunities in this particular period have probably been missed, because as I say,
side of it, yes. On the other side of it, you should be able to position yourself okay.
Yeah, I think when it comes down to what happens on the other side, then you just get back to some normality. You trade the cyclicals. That part of it almost becomes quite elementary in some respects. Or logical. You just trade the cyclicals back to the upside when things turn. But if you're trading an event and they only really happen every 10 years, so that when's the next one, I don't know. But if you were trading the event, then you just have to get into the right sector, and certainly in this one, it has been the pharmaceutical sector. This is the pharmaceutical sector on the FTSE 350, and that one is up. Let's do a percentage line on this. So the pharmaceutical sector's up 20%, and that's not even at the lows. Where's the low down there? That's up 30% from the lowest point to where we are now. And when we can't make light of this. This is in the space of 2 months that people that have been holding anything like this has made. A 30% within 2 months, and we're just talking about the sector, not even the individual stocks, because when you go look at some of the individual stocks, as I say, some of those bad boys are up 400%. I mean, AstraZeneca must be up a good 40, I would suspect, but yeah, I mean, we'll have to wait for the next one, mate. The next 10 years, let's see what's out there.
Won't make the slightest bit of difference to me, mate. I'll do exactly the same thing. I won't be looking at those because it, as I said, just gives me a headache.
Yeah, Helen, that they I'm going to pass you the screen, mate. Helen, they don't make the COVID drug. What they've done is that they've got a deal with the Oxford University to produce a COVID-19 vaccine that could be released as early as the end of the summer, so at the end of July potentially. So AstraZeneca, that move is probably, the majority of that has already been priced in. But if they come up with a successful drug, then you can guarantee that AstraZeneca are going to keep going. So you know, fascinating stuff, as I say. But you know, for picking the right sector after the event, you know, it seems pretty simple, doesn't it? And you know, when you're in the midst of battle, not having to have done it for 10 years, it does kind of become quite tricky. I managed to get on Netflix when the whole thing happened, and I bought some gold stocks, which did really well. But by no means did I have the best stocks of the lot. Um, but you know, now we need to be thinking about what's the next phase, what will do well as we come out of this, and what potentially will do badly. I mean, I would suspect that some of those pharmaceutical companies that don't get the deal, don't get the vaccine, don't get the antiviral cure or benefit from this are just going to tank. You know, the ones that everybody's buying everything right now, just in case it's those guys. But one of them is, you know, some of them are just going to tank.
Yeah, well, all you need to do is look at the ones that have gone up exponentially, and as you say, if they haven't got the answer, then they're back to zero, basically.
Yes,
and,
absolutely.
You know, and you can probably throw your Netflix and all of those streaming services
completely, mate.
Into that
completely
can as well.
That's what you would do, isn't it? If the market is to come back out of lockdown and get back to some normality, then you start to think, okay, well maybe we do sell Netflix, but I probably want to see what the subscription numbers were, because probably a lot of people will forget they've got their subscription for a couple of months.
For a while, yep.
So they'll probably manage to turn in quite a bit of revenue. And I was watching Netflix last night, and I've got to say, mate, it's pretty rubbish, really. You know, most stuff they put on TV, no matter whether you're watching it terrestrially or whether you're watching it on a subscription based channel, most of it is tat. You know, there's a couple of things that are, you know, all right, but you know, you're paying for the whole system. I know it's probably not very expensive. It doesn't seem it anyway. It's about 360 quid a year. But you know, most things that people make are just rubbish.
Is it for Netflix?
Yeah, it's about £30 a month. Yeah, something
My
like
God,
that.
we only pay, I think, $120 Australian dollars.
What, a year?
Yeah.
Yeah, that is cheap. That is
But
cheap.
we pay, what do we pay? You can pay $120 a month for Foxtel. So they get the big share.
Yeah, I mean, I might be wrong on that actually. I might be sort of like lumping in another media thing that we've got. I'm not sure. Disney was 50 quid for the year, and I got that as well. And I've watched The Mandalorian, and now I'm there just going, well, you know, I really bought it so I could watch some movies with my daughter, but she keeps getting nightmares about Pinocchio. So I don't know how many Sundays we're going to be sat down with any other movies. I think that'll probably be it now.
What am I into at the moment? That Money Heist thing.
Money Heist. Yeah. I don't know that.
Yeah, it kind of gets you in. It's only B grade type stuff, but yeah, it's interesting. Got it. Yeah. That's all I can say about it, really. At the end of the day.
Well, I've given you this. I've given you the screen, mate, for some analysis.
Oh, have you? Okay.
Yes.
Thank God.
I have to say, do you know what? I tell you what, I've become a little bit of a bore during this period, because we keep listening to classic FM in our house. We you know, even the radio is kind of. Well, I don't know really, but it's kind of, the radio's doing our head in because of all the adverts and all the talking. So
yes,
we flipped to Classic FM, and it's just quite calming. You know, I can't believe I'm sort of like getting to the point where I just want everything around me to be calm and not noisy anymore.
Speaking of noisy, Angus is in the house. Okay, we want to have a look at oil very shortly, so we'll come back to that. If you can have a look at oil, mate, whilst I'm trotting around the grounds here.
Sure.
We'll come back and have a look at that. Very important, actually, oil, to me in particular, not so much in this show because I've only got one currency pair that involves the CAD in this show, but later on in the minors, I'm pretty keen to trade the CAD long, actually. We shall see. Righto, let's go. Yeah, disappointed I missed this yesterday, I've got to say. And oh, gee, there were a few opportunities actually if you were in tune at the right time. You had to be quick with this one, of course, because there was a news event happening at the time, or reaction to the news event that Chandru pointed out to us. And I said at the time, if we got a break and retest here, that we would look to trade it, but the news got in the way and I wasn't too keen on taking that. But there you go.
I don't think we got your screener yet, mate.
That could be problematic. Okay. Try that. Pick of Angus. Yeah, I can do that. Sure. Okay, so euro dollar. So we've missed it. What do we do? Do we still look to trade short? Well, yes, we do, but it may not be as easy as first thoughts. Let me go to the 4-hour chart. See, the whole system revolves around coming back into a range and looking for a lower high. And that's why I didn't want to trade that yesterday. I wanted to see this up to the weekly pivot, give us that lower high, and then trade it to the bottom. Of course, that news event got in the way and bang, away she went. So yeah, I'm not kicking myself in the butt for it, but it did, during that news event, actually set up as a break and retest of the monthly pivot. Somewhat like I've got a potential order on pound Aussie. I'll point that out shortly. I'll share that one with you guys. I don't normally share the miners in the show, but we will share that one. So I've really I still haven't seen the significant lower high, and some would call that a significant lower high. I wouldn't, because it's just a bang, wham, bam, thank you, Sam. So I really want to see price get back to a level here. And can I imagine that happening? I can imagine it happening. Whether it will or not is another story. So I'd really rather, I think, get euro dollar down here to the bottom, so we can then start looking for longs back to the high of that range. So I'm a little bit ambivalent. Yes, if it gets up to here and gives me a lower high, then I'll look to trade it short. But I think I'd rather get this out of the way and start looking for the longs. From a bias perspective, I'm short. I'm still short because I don't see any reason for this to turn around. And the last time that we came off a boundary was off the top, and therefore we look for lower highs and we look for it to go back to the bottom of the range. So really still middle of that range, and that makes it a little bit trickier, I suppose. But therefore we go inside the tighter range and look to play it off the top and the bottom. And as I say, we haven't really got that significant lower high yet. Dollar yen, if I'm disappointed with the euro dollar not getting in short, then I'm far more disappointed in not getting into this dollar yen, because, well, two reasons. We got out of it, and I thought that was a really good exit that we made, but we were looking for a re-entry off probably the monthly pivot, and it just hasn't come. What has come is just a mess. It got back down here, challenged the lows, and just snuck through, and then a little retest. It's leaking. It's not really moving. But that said, if you have a look at that bar there, that was the one I had a look at, and I thought, nah, it's too big to trade. No risk, no reward available for the risk. Then you got that one, double pump, daily pivot, weekly pivot, rejection bar, eminently tradable, except I don't trade those bars. If that was white, then a different story, but it wasn't. And same with this one. Again, bounce off the daily pivot, short. No real daily pivot test there or this morning, because this was in the changeover, and bang, we've gone straight down again. Okay, let's talk how we get into this. Well, always I'm looking for shorts off a resistance level. So here's the thing today. $4 yen. That'll be my testing trade line. And here's what I'll be looking for. You can see the confluence here of resistance trade line, support trade line, and daily pivot. So that's the key level for this cross for today. If we actually get a chance to see it there, I suppose that's the burning question. Are we going to get up there, or is it going to continue to fall? So what I want to see is, goodness me, I want to see my cursor to start with. It's lost. There it is. Okay, I want to see price get back up to here and do one of two things. Show me that it wants to go long by going like that. So break and retest the confluence area, or break and come back underneath this area here, then retest that from above, from below, sorry. Then I'd like to go short, not the best place in the world, but it is off resistance. And if I were to see that, then I would place a short, but I've got to take profit before these lows. And that's going to be the challenge that I have. So that is dollar yen on the 4-hour chart. Of course, the smaller time frames will give us potentially an earlier opportunity to trade it. Let's investigate that scenario. It'll be the same thing. It'll just maybe give us a quicker opportunity or an earlier opportunity. So again, straight up here, break this level here, get back underneath it, retest it. This would be a far better entry because we will have more room to play with. So up here, a little bit of consolidation, back underneath, retest it. You could either trade it short at higher risk from there or short at lower risk from there. Again, TP1 has to be at this area here. So that's going to be dollar yen for the day. No more work to do on that, I wouldn't think. I don't want to trade it long, but if it were to come back above here and retest, as I said, that would be a strong bullish signal. So not getting back below that level. So break, retest, maybe there is a long on there at some stage. Again, higher risk entry from there long, lower risk entry from there long. Got to take profit here.
It's very, very weak, isn't it, the dollar yen?
It is, mate, and it continues to be. So it's been like that for yonks, you know. If you have a look at the bigger picture on dollar yen, you go back as far as you like, basically. Since it put in this, well, double top, head and shoulders, broke the neckline, came back and retested the neckline, and it's just gone wander down since then.
Yeah,
you know, going back 4 years. So it really hasn't shown a thing, has it?
And I think there's some interesting bars on this one that actually we'll probably maybe we'll cover them in the US show later on when we come to it. But I think there's some quite interesting bars that express, you know, some of the sentiment with dollar yen for really the last week, and probably did create some pretty good opportunities as well. But yeah, I'm just having a good look through these charts now, and some of them really aren't moved. But the dollar, just mind you, I'll tell you what, I think the pound's quite interesting. Because the dollar has been very, very weak, and yet the pound has gone nowhere against the dollar. So if the dollar starts to strengthen, you'd have to wonder whether that pound might be in a bit of trouble down here.
Yeah, as I said in the evening show, the US session yesterday, if the dollar strengthens, and I know the seasonality is very strong for the dollar this month, but I'm saying if it strengthens through May, I'll eat my hat. No, I won't eat my hat. I'll start following seasonals. That's what I said.
Yeah, you did. You did.
But you know, this is interesting. If you want to put a line through the middle of that range, that's pretty much what we're oscillating across and back and forward. So, you know, I guess if you, from a trading point of view, as soon as it hits these tops, you start looking for shorts, I'll get it right. And if you take some profit at mid-range and then wait for it to crack through it, it's not a bad way to trade this pair. And that's why I've been following it very closely for quite some time now. But I think I've messed this up. I think I've missed this, and it's annoying me. But, you know, SH1T happens. Helen, microphone, is there something wrong with my sound? Nobody else seems to be having an issue. Don't know. Okay, so this is Aussie US dollar. Of course, I'm still a bull, but as I keep saying, I see this monthly pivot underneath us here, and I think that is not a fait accompli, but I've got it in my head that we've got to go there before we look for the longs. So if that is going to be the case, it should look something like this. If I'm to trade it, that is, it should look something like down to here, couple of bars, back above, retest, enter long. That's what I'm waiting for on the Aussie. Do I want to trade it down to there? Want and will are two different things. There's definitely the hint of left shoulder, right shoulder, head sitting here. It's a little bit squeezed and squished up, I understand that. But there's kind of that there. So it wouldn't surprise me if we actually do get that. Whether I want to trade or not is another story entirely. Let me investigate. So to trade that down to there, I don't want to trade on that chart. What have I got that can convince me it's tradable? Yeah, a couple of bearish engulfing bars and a lower high, maybe. Don't really see the candle though, I've got to say. 30-minute chart. There's a possibility. Okay. It's a bit steep though. Yeah, I'm not a fan. I was thinking break, retest, go. It wouldn't be the worst because you're going to take out these lows as well. Yeah, I think I'll just look. I'll look at that. And if it does happen, then I'll look to trade it. But really, it's the only play for me at the moment because I don't want to trade long from here. I want to wait till that monthly pivot is tested. But of course, if we get a strong signal that this is about to go long, then I'll be paying attention to that one as well. So let's move on to cable. And pardon me, if you missed it earlier, they are the parameters around the OCO beta test trade that we are playing on pound US dollar for UK Open. That's the 4-hour chart I'm looking at. The hourly chart is gobbledygook. There's absolutely nothing going on here. That said, there is a little false break setting up here. So we've come below the trade line. We've consolidated, haven't gone back above it yet in terms of a close. But if we were to do that, I think there's a possibility here. So this one would look like exactly the reverse of what I've been talking about. So this one gets up to here, closes above the daily pivot or on the daily pivot would be good. And then retest the trend line. Entry there. TP1 there. Exit there. That would be my play on pound US dollar at the moment. Ash, you're a bit bullish, you say, because it hasn't tumbled?
What, on the US dollar?
No, on the pound.
No, quite the opposite. Quite the opposite. Yeah, okay. Yeah, very bearish actually. Just because it hasn't, you know, I think the dollar is, well, maybe it hasn't strengthened against everything. But just looking at the dollar and I've got a head and shoulders as well on the daily on the pound, and we are currently on the right shoulder. So it's not been able to get above that monthly pivot, and that appears to be providing some resistance up there as well. You know, it's tried quite a few times, but is that the daily? Actually, no, sorry, mate. Switch to the 4-hourly. Yeah, you see, I've got that head and shoulders pattern there. So this to me looks like it could be in a bit of trouble. I mean, we you know, the Brexit negotiations have resumed with very little in the way of going forward, and I honestly I can't see how they resolve it. And this is the thing with Brexit, it hasn't really come up as yet, and I wonder whether it will soon. But the UK has now been it's been reported as the country with the second worst death rate. It's got the second worst death rate in the world, and I honestly think that Brexit has kept the government's eye off the ball of domestic matters, and that's probably why they reacted in the way they reacted, which was poorly. They reacted very, very badly to this situation and this scenario. They were late. They were a little bit watery when it really came down to actually taking decisive action on it. And I wonder whether they just had their eye somewhere else, and as I say, Brexit talks don't seem to be going particularly well. And every time the Brexit talks happen, the pound tends to weaken, because I wonder whether the UK government just is not interested in a deal. I wonder whether they're just going to try and see it through and come away with, they're either playing hardball for the reason that they're really after the best possible deal, and the best way to do that is to play hardball with the EU, or they genuinely.
Boris has been crook. He's probably not on his game yet, so there's been a little bit of quiet around that, one would think.
Yes, well, there has, yeah, and he's back on his feet now, and Brexit talks have resumed with him back on his feet. But do they get the deal? I mean, it's going to be difficult, I think, for the EU to offer the UK really what it's after, and it really does depend on the buckling. Does the UK end up buckling on some things? And I have to go back to Margaret Thatcher. She got hijinxed when it came down to joining the EU, and really we should never have joined. And don't get me wrong, I'm certainly more of I'm more pro-European than not. So I prefer to be in the EU than I wouldn't prefer than not be in the EU, because I think the benefits of collaboration far outweigh going it alone and trying to do things yourself. But we shouldn't have been in the EU in the first place. We shouldn't have entered on the terms that we did enter on in the first place. A better deal should have been struck. But she was fooled. She was hijinxed in the first place and ended up signing something the way that she shouldn't have signed away. And I guess there might be a case that Boris Johnson is trying to claw some of that stuff back, and maybe he gets it. But I do think the road to that point, which is what, November is it this year, that we finalise some sort of partnership. I think the road that we travel to that point is going to be pretty difficult for the pound in the way of price action until we get close. Every time we got close to a deal last time, something got done. Every time we got close to no deal last time, something got done. So I wonder whether we're really waiting until September, October time before we trade the pound higher. I wonder whether we should really still be looking at the shorts in the pound anyway.
Well, I am at the moment. I did show you that potential long, but I'm having a good look at this chart as well, 4-hour chart. And I think if I'd been interested this morning, yeah, I could have had a closer look at this, because we have had a break of the daily pivot yesterday and a retest of the daily pivot yesterday, right on the monthly pivot. I could well have traded that. I don't think I'd be very happy at the moment, because we would have been triggered like 8 hours ago or something, and it's gone absolutely nowhere. But yeah, I'm totally seeing that. It's not the worst in the world, but it's not the best either. And we do have still an untested weekly pivot. I think, like the euro and a couple of others, I was waiting for something a little bit more substantive in terms of a significant lower high. This is really a range that we're in rather than a lower high, and that's what I'm looking for. So I think my entry would be better off here than where it currently is, which is at support. And as you know, I don't really like trading short at support. I like to be at resistance. So that then goes back to what I said before, and I think we're willing to play that. So if we do get a false break here, not looking likely at the moment, but this can go on for ages and still come back up here and retest, then I still think that's a play. Depends on where you have to get into the market, of course. Anyway,
I think,
long to go short.
Difficult one, isn't it? Helen, the UK is still in the EU as we speak, and it's not that I think that the effect would have been less. What I think is that if they weren't negotiating to leave, they would have been able to think about genuine matters that concern the country, rather than leaving the EU. So I think that they've put their resources and their focus into an area that it should have been taken away from, even if they wanted to leave the EU. Those negotiations should have been put on hold. But the problem is the government refused to do that, and I think we're now seeing the kickback of that with the country in the being the second worst death toll, and also quite a long way from coming out of it. Where some of the other European countries are coming out of lockdown, the UK isn't able to do that. It reacted very, very badly to this whole event. They lots of countries reacted badly, but where the UK politicians have been trying to sell it that we're somewhere in the middle. I think the numbers are starting to prove that we are right at the top of how badly this whole situation has been handled. So the UK it's a strange place at the minute, mate. I have to say, but being in the UK, very, very strange.
I'll bet.
Last few years has been a bit weird over here.
Yes, 4 of them.
Yeah,
Hey, it must be very near the anniversary of. It would be 4 years, wouldn't it?
Yes, yeah, will be. Yeah, July I think it is, or June, July when we took the vote. And it's the UK. It's a wonderful country. It's got a really interesting climate. I know it gets a bit cold.
Some people would call it interesting. Yeah.
you get the rain and stuff, but the air is clean and it's sort of it's clear. Well, certainly where I live anyway. And it's got some lovely parts, and generally speaking, I think the people are good people as well. But it's been strange the last few years. I think it's exposed a side to the UK that, if I'm honest, if I didn't have a family, I think I would have left at least for a little while. Brighton's lovely, Helen. It's brilliant, but I think I would have left for a little while if I wasn't if I didn't have responsibilities. I would have gone. Don't know where, but I would have gone. maybe Australia. I have to say Australia doesn't really it doesn't do it for me. It's a bit new. I think I like somewhere with a bit of old tradition.
Tassie's got old.
Yeah, I'm not talking about you, but I'll come and stay with you for a
bit. I'll put you in a cell. That'd be all
right. I'm sure there's parts of Australia that have got some heritage that I could get into.
Yeah, Tassie.
Yeah, Tasmania.
Look it up. That's where you bastards bought all your slaves. You pommy bastards. Treated them terribly, I've got to say.
Oh, mate. I mean, the UK has got such a tapered and terrible history in some respects. I think it's, this is the thing. I don't think I ever thought I'd be.
Lives in India.
Yeah, I never thought I'd be embarrassed to be British, but I have to say that the last 4 years I've been kind of a little bit uneasy about it. I thought only the Americans deserved to be.
When they bowled the ball underarm, mate. or when they hide sandpaper down their pants,
Yeah. Oh, yeah. Well, I think that's the thing, That's the thing about the countries to move to, and I wouldn't move to America because I think they've got even more reason to be quite embarrassed having a man in power that they do. If I was really sort of like, if I was savvy about it, do you know what? It'd be somewhere in Europe. I think I'd go somewhere like probably Italy or Spain or something. I think somewhere like that would be nice. Nicer climate, nice and chilled out. Nice wine, a nice glass of vino on the balcony. Somewhere like that would be nice for me, mate.
There you go. Sounds all right for a visit.
Yeah.
All right. Now I'm sharing with you, talking with the pound as we were. This is, you were talking earlier about counterintuitiveness and all the rest of it. I'm using the bigger picture here rather than the intermediate picture. And the bigger picture, I mean, we pointed this out how many weeks ago? 1, 2, 3, 4, 5, 6, 7 weeks ago, 6 weeks ago, how we had this massive tweezer top sitting here, and we actually traded that when we could, and we've traded it twice. We traded this leg and we traded this leg. Now I'm trying for leg 3, and this is, as I say, a little bit counterintuitive because we've broken above the weekly pivot, and we've now retested the weekly pivot with a low test bar. So I know there'll be people clamoring over themselves to jump into this long, one would have thought. I'm not that, but I've set an order which nearly got triggered, and I'm pleased it didn't at this point. And there it is there. I'm trading, what's this one, Ash? What's this setup? He's not talking to me, or he's muted, one or the other. Anyway, this is my double cross that I like.
Is the double cross? Oh man, do you know what? I was shouting double cross and I was muted.
Of course you were, Wally.
Oh.
So that's why I'm playing this, and with the bigger picture in mind, of course. And I think phase 3 will come, but where it comes, I'm not too sure. But this is probably the first opportunity to trade phase 3 of that bearish run. So that's why we've placed that order. If you want to follow it, the entry's at 1.9267. Stop loss is above this bar here, which is now the natural swing, and that is at 112 pips, or if you like, 93.79. 1.9379 is the stop loss. I'm going to take first profit at 52 pips, which is just bang on this low here, and just above DS2, and I'll remove a third at that point. TP2 is just before the lows at 232 pips, and we'll remove another third and move our stops to entry at that point if we're fortunate enough to get there, and then it's free for all. You can just ride this however far you want to ride it. Hopefully it gets right down to here somewhere. That would be pretty cool, and a damn nice trade if that were to pan out. We'll see. Much depends, of course, on how long the Aussie can stay buoyant. And, of course, that depends a whole lot on what happens in China, and et cetera, et cetera, et cetera. So there's a whole lot. Type it out. Yes, I can. Absolutely. This is on a 4-hour chart, I think. Is it not? Yep. So let's do that.
It's the pound dollar crystal.
Pound Aussie, mate.
Oh, sorry, pound Aussie. Pound Aussie. Sorry.
Pound Aussie is a sell at 1.9267. Stop loss is at 1.9379. Yep, 1.9379. TP1 is 52 pips. You guys can work that out for levels. And TP2 is 232 pips. Okie dokie. And that's on H4 if you want to know the setup, which is a double cross at the end of the day. What's a double cross? Break of a pivot, break of a trade line, break of anything, but pivots normally with a decisive bar, followed immediately by the exact opposite, a buying bar across the pivot. Okay, so that's a double cross. I think in Wave Rider or income creator terms, that is known as a train track reversal. So as I said before, they'd be trading that in the opposite direction, provided they had a super trend that agreed with, and I don't think they would. I think the super trend, it may have changed, don't know. Anyway, that's not my concern. So there it is. Have you all got that? If you want it, there it is. Not here. I'm not only one, not all here today. I'm very seldom all here, Helen, I can assure you. Right, so let's move on. There's only a couple more to go. It is bang on the 6 o'clock mark here, which of course is what, 9 a.m. in your place, mate? And it is on to US dollar CAD we go. Now, as I said before, I'm pretty keen on the CAD long. Timing is everything, of course. And have you got oil ready to go, mate? We did want to.
Oil is ready to go. Yep.
Okay. Happy days. I see this as an opportunity. It has not quite given me what I wanted to see, and I don't like to trade off support, as I've said many, many times before. But what I'd like to see is price find its way up to here, get back underneath that, retest it, and then I can go short. But I would be prepared if we got a breakout here and take out that low maybe. If we took out that low, then came back and got a retest, I think that would be my opportunity to go short off the monthly pivot. And I would take it from there rather than the break. So that's dollar CAD. That's the hourly chart we're looking at. I'd love to see a break and retest, or better still, a false break of the resistance area. Dollar Swissy. Dollar Swissy's come off the bottom, and frustratingly and very commonly at the moment, I'm not getting my significant lower highs or higher lows, in this case, higher low. So that's got to pull back. If I got to pull back to the daily pivot and got maybe even the monthly pivot or the weekly pivot, they're all there, and got a higher low, maybe the weekly pivot would be better, got a higher low, then we can trade it to the top. But it's getting a bit long in the tooth for that. Again, like the euro I was talking about before, probably best to get it to the top and then look to trade it to the bottom. Finally, the Kiwi. Kiwi had some good news this morning. I did see somebody put that in there. I can't remember who that was. And dead right. So I'm a little bit bullish the Kiwi as well. You might transfer that onto other currency pairs, not necessarily the dollar, which is, I continue to say, everybody's telling me it's going to rally throughout May. So maybe Kiwi and pick a weak pair. I think the Aussie can come down today. Maybe Aussie Kiwis are short. Maybe what else is weak? Swissy's been a bit weak. Maybe Kiwi Swissy. Pick a weak currency to trade the Kiwi against today. I think that's probably not a bad idea. In terms of the dollar, yeah, it's a bit of a mess, isn't it? Range inside a range and just total mess. Here's the weekly pivot. If we can get above it and retest it, maybe there's a long in play. Maybe if we came back and broke the support level, that would be the best one. Break here, hit the support, back above the pivots and the trade line, come back and test it, then go long. I think that would be the way I'd like to play Kiwi US dollar, but there's probably other pairs, and we'll have a look at those in the US session. Righto, Ash, oil and gone.
Oil and gone. Okay, let's have a look at this then. We have got actually some data just got released from Germany that was actually, I think, better than expected. Here we go. So oil is on the daily chart. It's in a sell area. If you look at this this particular trend line along here, there's probably another one along here which is now broken out of, and I think this one could be quite interesting, because if we put in both lines on oil, where you have the start of April effectively, so the top end, so I think that's the 3rd of April, extrapolating left to the 9th, and doing the first trend line. We're right on top of that, which does suggest maybe there could be an easing back, and really that's what you want, because if this one does ease back, then what it will potentially do is come into this lower trend line here, and if we look at that lower trend line, depending on why it comes back there, and that's the thing to watch out for. But if it can creep down here, maybe start to base out, and it will depend on. In fact, let's flip this back to a daily. Can I move this bar now? No, I can't do that. If this starts to creep back into this line, and depending on when it happened, but that would look really good if that was in some sort of conjunction with that low there. Then we'd be looking to pick it up. because we would have the reversal of a potential accumulation pattern of the inverted head and shoulders coming on down there. So that's what I'd look for with oil. I wouldn't want to trade it long at this particular stage. I think this bar, now if we look at this bar, this bar tells us quite a lot. So when you get a bullish bar pretty much on resistance, then it can have bearish implications. Now, we were talking the other day about what's an exhaustion bar, and this is a classic example of an exhaustion bar, because it's gone really from, it opened at the lows, ended at the highs, right into an area that that people would probably be taking a bit of profit with this resistance line, and then it's just looking for what happens next. Does it get a big dive back from this particular point, or is it just generally a bit bearish? And we've certainly seen this morning that the exhaustion has started to play out as this comes back inside the trend line. And this is probably not selling per se. It's just probably people liquidating some positions up here because it's had such a good run, and it did. What would you do if you see a bar like this on a daily time frame? What would you do? You just managed to grab a nice chunk of profit with a bar like that. So with a bar like that, because it's a nice chunk of profit and it's right on top of a resistance line, then you're much more likely to liquidate positions up here. So what we will see is an easing back if that's happened, or an absolute collapse if it's just an area to go short. But right now, we certainly want to try and look for the longs and see if we get the pattern that I've illustrated, with that inverted head and shoulder. So cutting back into somewhere around about 1950. Maybe slightly higher, maybe even $20 a barrel, coming into around about $20 a barrel. I think we should have a look at this then, and then see if it's worth trying to pick it up. It certainly would suggest that if we were to have something in the way of equilibrium, that this would potentially take at least. Yeah, it looks like the end of May, or sometime in May, sometime towards the end of May, it could be of interest. So you're looking at week 4 with oil. I'd probably want to check out the seasonality with that just to see what that would suggest as well. But if the seasonal suggests that the oil is good and strong in June, which I'm not sure about. I was about to say I doubt it would be, but I just don't know at this stage. I will check in a little while. But if the seasonal suggested that going into June the oil was strong, and you get that inverted head and shoulder, so you get the accumulation pattern, then I would suggest that would probably be a decent enough signal, as long as there's no further news about what's happening with oil.
We still need to get some planes in the air. We still need to get people back to work, and all sorts
exactly.
of things.
Exactly. I think the cut in production will certainly help things out. And if that was still holding and they were still happy to cut production, then and still keep that cut in production alive, then that would probably suggest that could probably hold that area. I'm just looking at the seasonals. It may well have
stabilized. I agree with that. Yeah.
Yeah, May tends to be weak for oil. We go into a June period which is flat, but then it absolutely tanks in July. So maybe a rally. This would be quite interesting. If it comes back, you'd probably want to look along this line here, and if this can come back, then it would be worth trading this if it came back sometime in May, to look for that. But probably with a mind to probably take the trade quite significantly lower at this point. And then if it breaks through, there might be a retest, and then maybe there's a chance for it to go higher. But I would have thought that we might even get caged to around about $30 a barrel before September anyway. So you might not be looking for great moves in oil, but certainly coming back here, I think that would be of interest initially for the very, very first move.
G'day, Dan, mate. I see you've got some. You've got an expat Brightonian. Is that
Yeah,
a
I
word, a
just no,
Brightonian?
I noticed that. I was gonna yeah, Dan, yeah, nice. Well, when Dan said Norway is the place it was at, I thought maybe Dan was from Norway, but then I read back and you've moved to Cornwall, which is also a lovely place as well. Do you know what? I love Brighton. I really like Brighton. You know, out of all the places I could live in the UK, I would choose Brighton every single time.
Cornwall's in the country, isn't it? Nice green pastures and things.
It's near the coast.
I knew that.
I think it is anyway. um,
I thought it was out
ye-
in the country because I watch what's that show? Escape to the Country, and they're always talking about Cornwall.
oh well, I think there's quite a
But
lot of countryside there. I mean, but you know, Brighton's got the South Downs, which is very, you know, it's got a lot of country around here as
well, I
well.
keep
So
thinking it's just a little postage stamp, isn't it? It's not like Australia.
yeah, exactly, exactly. He was born in Brighton, and he's moved to Cornwall for a quieter life. Yeah, well, I can understand that.
Cornwall's on the coast. Okay, there must be a green somewhere. Well, there's always
West Country.
green over there, isn't there?
Yeah, very nice place. Right, let me just explain the the Aussie yen before we go quickly, and then. Oh, you got the Atlantic, man. That is cold. Cold. I was in Ireland last year, and we were boarded on the Atlantic, and it was freezing, absolutely freezing. I mean, I don't swim in the sea for much of the year, but when it kicks into summer around here, you know, sort of like around about July, you can get in the water, but I'm not sure whether I would be brave enough around Cornwall if it's on the Atlantic. Very close to getting triggered into the FTSE 100 long. So this is the FTSE 100. I am just long, just above this bar here. Actually, really interesting bar in many respects, because if the FTSE can hold above these levels, then that would suggest that this reversal bar would provide actually some bullish price action. So I'm only maybe 2 pips away from getting taken into that long on the FTSE 100. Back to the Aussie Kiwi. So the short on this one really was generated from the weekly chart, and this bar on the weekly chart was suggesting that we would get some downside. Now, I did say at the time that we might be a bit early on the Aussie.
I wouldn't give up on it. Yeah.
No, because it's actually looking like it's getting a bit weaker again now. But you know, and again, head and shoulders pattern going on here, but we still need a little bit of further price action to give us that right shoulder. But now we took this on Monday, which would have been the 4th. So I took it here, didn't I? And my thinking at the time was that we were potentially in a little cycle to the downside. With a little trend line going along there. So I wondered whether you know, it might have started there and you know, we would have been okay with the stops. But the problem was this bar, as soon as that happened, then the trade was really well and truly off for me. You know, very unlikely to do well at that particular point. And it did, you know, it did turn around. You know, creating this bar, and then it came back, it's tested, and it's going back up again. But so I've got a visitor.
Hello, darling.
Well, we've got this little traffic light system going on, and I have to put up a red. I have to put up a red light when nobody's allowed to enter. I haven't put it up, so my daughter's coming to tell me that I haven't put the red up. You're putting it on for me now, right? Good girl. All right, well done. She still came in though. I don't know. These things never really. I mean, we have some great intentions in this house, but they never really go to full fruition. There's only one person that rules the roost around here, and I can tell you for sure, mate, It ain't me.
Yeah, you're a very poor third, I would imagine.
Yeah, I really am. That's why I stuck myself away in this man cave, and you know, come up here to trade. Anyway, so the Aussie Kiwi has still got a pretty good potential for some downside, as Jeff says, but we would have to look at that now unfolding. And it was the same with gold. You know, I took the gold trade off for the same reason. I was looking for gold to collapse after the ISM numbers. It didn't happen. Now, it's not to say that there's not a chance with gold to come down again. But I don't see why I would let it hit my stop when it's going no. What's the point? You know, I've got kind of money that I can use somewhere else. It lost the grand total of 5 pips on I think it was an 18 pip stop loss. So it's less than a third of the risk. And I'd prefer to shift my money, into another area rather than holding on to something which is going nowhere. Now, when it came down to the Aussie Kiwi, I've got to be completely transparent. I allowed that one to hit my stop, but I shouldn't have done, because as soon as I saw this happen, that trade should have come off. Because really, what I'm trying to do is I am trying to say that I have got a trade with specific timing. Now, this isn't necessarily an easy or always good practice to do, but if you have got a trade that you've put in the market and you expect it to move within a period or two, and I won't say a day or a 4 hour or an hour, because I don't know what period everybody's trading on. But if you have put a trade on in a market and you expect it to move within a couple of periods, and not only does it move not only does it not do that, but it actually starts to close above an area that you really had out as your high, I think it's probably better just to get out. It doesn't make any sense. This would be an example down here. So if I'd entered this there, if I'd entered that there, and I had a stop loss on the trend line, I would have probably put it. And I had a stop loss up there. In actual fact, from whatever bar, I don't know, maybe we'll call this bar here, and then all of a sudden it does this. That probably wouldn't have been hugely problematic, but that bar there closing, near the trend line, it completely changes my pattern. So I'm trying to trade this hourly, suggesting that I might well have a low, a lower high, and I should be going. But as soon as the cycle is broken, I don't really see the point in allowing it to hit my stop loss. I prefer just, go, okay, well, it's not doing what it should do. What it should do is I should be entering a trade up here, for an example. Let's just get rid of that. I should be entering a trade up here. Let's say I see that and I see that lower high, and I'm looking for, I don't know, some sort of break. So I trade this bar. After I see that bar break to the downside, it should go. That's what should happen. If you're playing the trend, then the trend is to the downside. So trade it down. FTSE could be case in point in some respects. Let's say that we are looking to trade the FTSE short up here. We see this, and we take this short here. Stop loss at the high. And the market breaks down, all well and good, but then all of a sudden it comes up, and this is the first flag here. It comes up there, puts in a higher low, and then it closes above my level. Now I'm trying to say that this is the high. I put my stop loss up there just in case. But I'm trying to say I've got the best area to trade this from. I'm in a downtrend, and I've got a nice area here to trade this from. As soon as this bar closes above my area, I don't see the point in allowing it to come up here and hit my stop loss. I'd prefer just to go, okay, look, I've lost a bit. I was wrong. I haven't picked the right trend. So I'm just going to get out at this point. I think confirmation that you are wrong by allowing it to hit your stop loss is a fairly expensive way to admit that you have just got it wrong. So with the Aussie Kiwi, it's just wrong. Trying to get into that point, it's just wrong. But I think yes, it is. It is, and there's something about this as well, is that Jeff and I don't have the ability to tell you after we have closed the trade if it's got, we're on the show and then we get off and then we're on the next show. We don't have the ability to really give you updates on the trades, but oftentimes if something doesn't quite go very well, I will just get out and not bother with it anymore. But I can't tell you guys that, but I would try and say to you guys, look at the trade, look at what it was meant to do. And if it doesn't do what it's meant to do, consider closing it. And if it all of a sudden turns around and starts to look good again, get back in, because you're still trying to go for multiples of your percentage. So if you're going for 2% and you lost, you came out at 0.5%, but then it turns around and gives you another setup, then re-enter, because you're still going to make a 1.5% on that. So that's just something that I like to do. If the chart doesn't do what I expect it to do, I prefer just to go, well, my stop's out of the way, just close it here, no point in it hitting that, and then get out. Aussie turnaround was at a high, was that? High or low? Yes. Yeah, it was a high or low, yes. Hey, Orlando's in. How you doing, buddy?
The big O.
The big O's in. Big O's in. Okay, we are triggered long in the FTSE 100. I am. You're not going to get us banned again, mate. We got. No,
they couldn't decipher what that was. They wouldn't know it was music.
We've got a long triggered in the FTSE 100, so I am long in the FTSE 100. As I said earlier, it's a bit of a maybe a slightly risky trade. I don't know, but I quite like it, just for the fact that I don't understand why the market is rallying, so I may as well go with it because that's what it's doing, and it's remaining perfectly irrational. So I am going to trade the irrationality. So I have taken a long in the FTSE 100. If anybody else is long, then let me know, and I will talk to you through the targets. The horizontal level, yeah, I see what you're saying, yeah. If anybody else is long, let me know, and I'll talk you through the targets. If not, then I will talk about the trade further in the US show.
Okay, you have been triggered short the pound. So switch from or cancel your buy orders, guys, and start trailing on the 15-minute chart to seller bars. Okay, we are short the pound at the moment, and we do not have anything else triggered at this point. So we'll stay there, and I am done. Wow, that's a bit of a move on the pound, actually.
Oh, that's probably why the FTSE's going in its direction. The targets on the FTSE, somebody was asking. First target on the FTSE is going to be this point here at 59.20. 59.20, so about 50 pips.
Might be a dollar buy by the look of it.
What's that, mate?
They might be buying dollars rather than selling pounds at the moment, by the look of things.
What's going on with a pound? Euro pound is having a bit of a pop to the upside. Oh no, the euro pound's going long, mate, as well. I wonder whether there's some sort of Brexit stuff going on.
Might be a bit of both. Yeah. Okay.
Yeah, pound's tanking. Pound Sing tanking. Pound Kiwi tanking. Pound yen tanking. Pound Aussie tanking. So it is on its way.
Pound Aussie tanking. Have we been triggered? I haven't got that chart up.
Was that no? It's not construction PMI. That's strange.
Yep, we're in that trade as well. Pound Aussie short. That's been triggered.
Oh, you know what? We have just had a report of the deaths over here, which have topped 30,000. So maybe that's something to do with it as well.
Pound Kiwi. Who's trading Pound Kiwi? I'm not trading Pound Kiwi. Must be someone else. Brian, you must be following something else. I don't know. I'm not trading Pound Kiwi. Right, are we done, mate?
We are done. We are done.
Action at the death. And thank you guys for all the questions, all the interaction. And those of you who are in the US session, we will see you then. In the meantime, the rest of you will see tomorrow.
Yes, we will. Same trade time, same trade channel at 5 to 8.
That's the date. Don't be late.